This is the Times Television Network, and you're watching ET Now.
Let's get in there. Nizam Idris at Macquarie Forex and A.V. Rajwade as well, who joins us to give his views on the currency markets. Nizam, let's start with you first. And how do you see the dollar index since 2014? Many analysts are calling 2014 yet again as the year of the dollar.
I mean, that's cool. I think the dollar will strengthen in 2014. I think it's worth remembering as well that 2013 wasn't a bad year for the dollar. The dollar basically weakened against sterling and the euro and maybe also Danish kroner, but strengthened against most everything else. I think the dollar index was like 1% higher for 2013. For me, I think 2014 could see a slightly better performance than that. We are looking for 3 to 5% appreciation of the dollar index. And, you know, like I said, the difference here is that the tapering is taking place. The Fed is easing less, printing less money, and probably by the end of 2014, the Fed could actually stop printing money altogether. And the difference in monetary policy relative to, say, Europe and even Japan, both of whom are still not keen to end quantitative easing, then you'd probably look at a stronger dollar. So yeah, I mean 3 to 5% appreciation in 2014 is probably likely.
Fair point, Nizam. But do you expect Asian currencies seeing a reaction in January when the tapering actually starts from the Fed?
I think we have already started to see some reaction. I mean, dollar is strong in December, which is not the usual thing. I mean, the usual seasonal movement in the dollar in December would be for weaker dollar, higher stock market. They call it the Capricorn effect, for example. We are not seeing that. I mean, stock markets are higher, but the dollar is strengthening still. I think that, in my view, the difference lie in the fact that the Fed is tapering, and therefore the dollar is strengthening. We will see more of that effect into 2014. And in my view, I think insofar as dollar Asia is concerned, the big question is whether the tapering comes with very strong growth. Because if there is strong growth, then Asia could benefit from that. As of now, I don't see that. The simple indicators that we are looking at right now is, for example, looking at the PMIs, the ISMs, globally. That strength in PMIs, ISM have not been reflected in stronger Asia exports. So what I'm saying really is that the recovery in the US economy is modest. And as of now, it has not been translated into stronger export demand for Asia output. Unless we see very strong growth out of the US, leading to very strong growth in Asia exports, I would still expect dollar Asia to be higher into 2014.
Nizam, what's your sense on the Indian rupee, which has seen nearly 10% or more than that fall in 2013 on high current account deficit, inflation, Fed tapering, and also some slow reforms? And now with the Indian elections kicking in, how do you see that impacting the economy and the rupee, and how would you range it for 2014?
I think the Indian rupee has done well on the promise of reform, right? I mean, to be fair, Raghuram Rajan has come in as the governor of RBI and has basically led by example. His first speech was to talk about liberalizing the banking sector, which is, a kind of reform. Now, the question is whether, this expectation of broader reform, broader economic reform coming through from the election. In other words, the market expects Narendra Modi to become the next Prime Minister, leading the BJP in the upcoming election, will mean that the new government, the incoming government, would be more pro-market, pro-reform. So that's been priced in. I think that's been, some of that is being priced in. Now the question is whether that sort of expectation could be delivered. Now all these talks of reform needs to be delivered, because at the end of the day, I'm still looking at current account deficit of around about 50 billion US dollars for India. You need to fund that current account deficit. There's still a large current account deficit of around about 3.5% of GDP. To fund that, you need FDI or foreign direct investment. And for foreign direct investment to come in, you need reform to be strong. So, expectation has been good so far. Rajan has been doing the right things. But the incoming government after the May election need to deliver reform. Otherwise, I think the rupee can weaken. For me, in the short term, I'm looking for the rupee to remain pretty much stable around about 62. But into 2014, into the second half of 2014 or middle of 2014, I expect the rupee to start to weaken, especially if reform is not delivered. I am looking for 66 in dollar rupee into 2014.
Vijay, how would you look at the currency now as we get into the new year? For the very near term, how would you want to trade?
Manisha, the scope for appreciation in the INR is fairly limited, and I would hold my level of 60.50 to 60.80 in the cash market, which would mean somewhat higher on the futures market, which quote at a premium. Now, 63.25 is a level that I keep mentioning time and again as the potential for the dollar to appreciate. With 2014, the wild card level could be 65 odd levels also, especially around the middle of the calendar year, as in when the elections are either done or results are out, depending on what the political outcome is. So you're looking at very curtailed potential for appreciation at up to 60 mark, with the depreciation of the rupee taking it well past the 65 levels.
All right, so that's the levels to watch out from our experts on the Indian currency there. But with that, Vijay and Nizam, thank you so much for coming by and giving us your sense on currencies. And with that, that's all the time that we have on the hot commodities for you. Thank you for watching.
This is the Times Television Network, and you're watching ET Now.